Good afternoon, ladies and gentlemen. My name is Alexander Derricott. I'm a senior analyst within CRU's fertilizer team, and today I've been tasked with giving in kind of a bit of an overview of the fertilizer market as a whole, and then a bit of a deeper dive into potash. So, moving directly on. The fertilizer industry has done pretty well over the last 18 years. Back in 2000, we had demand at around 136 million tons nutrients. That's of nitrogen, potash, and phosphates. And growth was pretty good, except for a quick stunted period during the global financial crisis. And by 2018, we'd seen growth or demand hit around 200 million tons nutrient. So as you can see, those CAGRs were still pretty good, and we're pretty comfortable with how the market has progressed over the last 18 years. But let's have a bit of a deeper dive into those three core nutrients. So nitrogen. Nitrogen is by far the largest nutrient in terms of demand, with around 118 million tons of N being consumed in 2018, or around 59% of the market. Now, this is a chemical process by nature, with feedstock normally being coal or natural gas. The boom era really started back in the 1950s when agriculture really started to modernize. And to be honest, the most common form of nitrogen fertilizer is urea, with over 52% of the market. China is the largest producer of urea and also one of the largest consumers, alongside India. And what we see is that nitrogen also actually plays some quite interesting roles in explosives with ammonium nitrate, resin glues, which is a strong growth area in the industrial side of the nitrogen industry, and also in some food production, such as ammonium bicarbonate. Moving on to something a bit closer to home in a mining conference. Phosphates. Phosphate rock is a mineral which is mined, as many others, normally in an open pit fashion. It's the second largest in terms of total nutrient demand, with around 46 million tons P2O5, or 23% of that total market. Now, of this rock that is mined, around 75% is converted into phosphoric acid, the main intermediate product. And that is then converted or transformed into things such as diammonium phosphate, or MAP, which is monoammonium phosphate, or TSP, triple superphosphate. Now, this industry has undergone quite a bit of change over the last 18 years. Coming into the millennium, the US was the major incumbent, with the likes of Mosaic and Nutrien producing significant portions of traded exports. However, from the turn of the millennium, China really started to grow, and we're seeing companies such as Kailing, Wengfu, YTH, and Yihua really start to enter the export market for phosphate fertilizers. However, since 2018, we've started to see some stagnation in the US and China. It is now Morocco with OCP and Saudi Arabia with Ma'aden that are really driving growth in phosphate rock mining capacity and downstream fertilizer production. Now on to potash, the one I think everyone's really been waiting for. So this is one of the smaller markets in terms of total demand, with around 37 million tons K2O, that's in nutrient terms, around 18% of the market. So there are two major products here. MOP, which makes up the bulk of fertilizer demand, potash fertilizer demand, is potassium chloride, or MOP. But there is also significant interest in some specialty potash fertilizers, in particular SOP, potassium sulfate, NOP, potassium nitrate, and SOPM, potassium magnesium sulfate. Production here is concentrated in three major countries: Canada, Russia, and Belarus. But why so much interest in such the smallest of the demand segments? Well, if you look at the growth rates over the last 8 years, nitrogen has been growing at 1.5%, phosphate at about 1%, and it's been potassium that has been growing the strongest. And this is potentially likely to continue as major demand countries such as China and India have to realign their fertilizer application, moving away from nitrogen and phosphate products and towards potash in order to guarantee continued yield growth. So let's have a bit of a deeper dive into MOP. Well, of the 68 million tons KCl, so this isn't nutrient tons, this is in product tons, around 85% is MOP. And of that demand, it is spread mostly in the Americas and Asia. Now, what's interesting here, it is the US, Brazil, and China that make up the bulk of this demand. However, as I mentioned before, capacity is actually highly consolidated in the big three, in Canada, Belarus, and Russia. And when we see how consolidated the market is, 70% of production in 2018 and around 80% of exports originated from these three countries. And then of the next tier of producers, Germany, Israel, and Jordan also make up much smaller but significant volumes of capacity. And as you can see in the bar chart on the right, those 6 major producers hold a huge amount of capacity. So, moving on to specialty potash and the current developments going on here. So, specialty potash is a much smaller market. We were talking about 11.5 million tons in 2018, and the vast majority of that is focused in SOP. Now, it's a much smaller demand market than the commoditized MOP, but why so much interest? Well, there is a significant price premium that both NOP and SOP attract. But why is this? Why are we seeing this? Well, one of the major benefits of specialty potash products is the lower chlorine content. Now, most crops have some sort of intolerance to chlorine, and because MOP is potassium chloride, they can have some difficulties, especially around chlorophyll-heavy plants, as the chlorine can kill the chlorophyll. So these products are filling this niche of delivering potassium fertilizer to the required plants, but with a lower CL ratio. Now, SOP or potassium sulfate, is one of the larger products in terms of demand. Now, this normally has a K2O content, so its potassium content is between 50 and 51%, compared to MOP, the bulk commodities K2O content of around 60. So this product normally has the best K to CL ratio, so delivering that potash with the lower chlorine content. Now, it can be produced in 2 ways. Primary SOP is produced by extraction from brine, and secondary MOP production is normally a chemical reaction, primarily a Mannheim production, which is using MOP and sulfuric acid to produce potassium sulfate. Now, there's a lot of capacity focus within China, both split between primary production and secondary production, but also Germany, Belgium, and the US have significant volumes. So moving on to potassium nitrate. Here we have another standardized product with a K2O content of around 46%. But also here we have an inclusion of a bit of nitrogen with 13.5% in there. Now, that is one reason why we see those NOP prices outperform MOP. But this isn't the only reason why it holds such a good price premium. It is also highly soluble. This means that it can be used in many of the more advanced agricultural techniques, such as fertigation. But there are also some interesting industrial uses that we see, especially around thermal storage that could be used within solar power generation. And then on to potassium magnesium sulfate. Here, this is a less standardized product with K2O content varying between 11 and 40%. Here, obviously, it contains the potassium, but also magnesium. We see this product as an alternative to SOP, or when the farmer demands a greater magnesium product. Now, at the moment, presently, Germany is a major producer, so is the US. Recently, the UK has entered this market with ICL Bulbi, and there is also significant capacity in China. So I've managed to quickly and rapidly go over the current developments in the market. Let's have a little look at what's going to go ahead. So if we look at the MOP market again, here what we're seeing is many of the committed projects that we currently include in our base case, so these are the ones that are under construction and potentially fully financed, are mostly focused within the same 3 major producers of Canada, Belarus, and Russia. That is not to say that there aren't significant and valuable projects elsewhere in the globe. It's just the ones that we're seeing that are currently being developed will really focus in those three key countries. And in terms of demand and the potential for these new projects to develop, it's actually these major three countries are seeing greenfield projects really starting to move forward. We've gone through an expansion period of gradual increases in brownfield capacity, and now we're seeing new projects really strike home in greenfield opportunities. Now, why are we seeing so much focus in Canada, Belarus, and Russia? Well, a lot of them are very, very low cost. Why? Because they have good deposits, large seams, and good economies of scale. Also, there is existing infrastructure and expertise. These countries have been producing here for a while and have demonstrated time and time again the ability to bring on new capacity. But, as I mentioned before, this doesn't exclude any other project throughout the globe. There is one other thing that's probably worth noting here. Now, that is, there is an additional potentially 5 million tons of idled capacity in Canada that could, if MOP prices remain stable or increase, could be brought back online. That is a potential risk, okay, for the forecast going forward, especially because what we're seeing is demand could reach around 76 million tons by 2023. So there is still good demand growth in the potash industry going forward. But what we are seeing is significant capacity growth as well. So if we've had a look at MOP and the forecast there, let's have a look at the specialty market. So when we look at SOP, we see it as probably one of the more exciting of the three specialty products. Why? Well, because we see less committed projects in our current base case. That is not to say that there aren't projects available. We just haven't seen them hit some of the key points that we need to include them in our base case. But we are seeing some decent demand growth as well. And so we are seeing utilization rates in the industry climbing from 63% to 69%. That's actually pretty tight for SOP because it can be quite a seasonal product, especially in China. So there is some good outlooks in that market. Moving on to NOP. Here it's more of a story of stability. We actually see utilization rates remain fairly flat because demand and capacity growth are pretty well in tune. But what this does mean is it's potentially likely that that price premium that is so attractive around the NOP market is likely to continue. Now, what we are seeing is capacity expansions here will remain focused within those two producing countries of China and Chile. So there won't be too much change there. So it really is quite a stable market. And then finally, we come on to SOPM. And this is actually potentially one of the more interesting markets to really have a look at because of the UK-based project that we potentially see coming online at the end of our forecast period that could really shake up this market. So our current forecasts, excluding Sirius Minerals, sees capacity and demand increasing at a muted but still increasing rate. But what we see is that potential up to 10 million tons of capacity potentially has to find a home outside of the SOP market, this Sirius project. Because total capacity in 2023, we're expecting to be 4.2 million tons. That's for SOPM. So this additional 10 million tons will not only be able to supply the SOPM market, but may have to either generate new demand for their product or have to move into SOP or even the MOP markets. This is something that potentially could be a bit difficult. But I hope personally that we will see a new mine up in North Yorkshire. It's been a while since British mining really had a big win. So I've pretty much run out of time. That was 15 minutes and it was fairly quick. Hopefully that's given you a decent overview of the fertilizer market And please feel free to come and grab me afterwards if you have any questions, or email me after the conference or one of my colleagues, and we'll sure be able to help. So thank you very much.